On this Monday, let's see how the markets are trending here about mid-session. Got off to a weaker start, and that weaker start came from the overnight trade. Some traders we've talked to already this morning were saying that this was a little bit of carryover from the response to that world supply and demand estimate and crop production numbers that was out on Friday. A little bit of bearishness in the market, and sure enough, December corn is down 2 3/4 at 374.5. Now we're only a penny off of the low, so yeah, a lot of pressure here. The July is down 4 cents at 395 3/4. Let's take a look over here in the soybean market, where January is down 13 cents now at 9.18. By the way, that nearby November down 13.5. March is down 12 3/4, and the May is down 12 cents. So we're into double-digit losses in the soybean market, pretty deep now. And now December Chicago wheat getting awfully close to the low of the day, down 3.5. The July is down 3 1/4 at 520 3/4. The Kansas City wheat market, it's also on the weaker side for those far out deferred contracts. But the nearby contracts are still a little bit positive. December is up 2 at 423.5, with the July down 1 at 444.5. Let's look at the product market as well, like soybean oil and soybean meal. First of all, soybean oil, we'll stop here. December is down 6 pennies at 31.44 a hundredweight. January is down a nickel at 31.66, and very, very close to the bottom of the range there. December soybean meal down $4 a ton at $300.90. January is at 302.90, and that is down 4.10. And Brian Hoops is here with us. He's with Midwest Market Solutions. Brian, it's always good to talk to you. Thank you very much. Happy Veterans Day, by the way. First of all, let's go over here and talk about this weakness in the corn market. Well, and soybeans, I guess you could throw in there as well. How much of this is related to what we're hearing out of planting progress is in the Southern Hemisphere?
Yeah, good morning, John. Good talk with you. Yeah, we're certainly seeing some weakness here in corn and soybeans. You know, the markets are focused on weather in the United States, which is pretty open for harvest for the next couple of weeks, and in South American weather, as some of the dry areas that have been a concern are now forecast to get some much better and much needed rainfall. And that is alleviating some concerns and seeing the market take some premium out of corn and soybean prices. You know, this is the lowest that January soybeans have traded since October the 1st, as we did not have really any type of a bullish surprise in Friday's reports. And with lack of demand and plenty of supply, we're starting to focus on South American weather for price direction.
Okay, and so do we look for that to be the main influence in this grain market now through February?
Yeah, well, for at least through January, when we get to the final production numbers for corn and soybeans, you know, there won't be a production update in the December supply and demand report. So we're looking at demand trends, technical trends. South American weather is your main driving forces, and demand trends, especially for corn, have been disappointing. USDA lowered overall demand by 100 million bushels in Friday's reports, 50 of that in exports and 25 of that in ethanol usage. But there's room to lower and lower those numbers even in upcoming reports. The USDA numbers are still pretty optimistic for ethanol and for corn exports. I think they're trying to anticipate maybe China coming into the United States and buying some U.S. products if there's an agreement reached. But until then, as I said, they're pretty optimistic that we're going to have better export profiles than what we have seen for this marketing year so far.
Brian, I don't have a whole lot of time, but I do want to make note here of the wheat market as well. We got pressure over here as well. So in the world market, how does this wheat market fit into what we're hearing out of Australia and those areas?
Yeah, the main thing has been traders taking some profits on some spreads. They're starting to sell Chicago and buy Kansas City, unwinding that spread that neared a dollar premium Chicago over Kansas City. That's corrected almost 20 cents since October the 21st. Trade is looking at these world production numbers, like you mentioned, seeing a downgrade of crops in Australia and Argentina, but actually increasing the size of most of the European nation crops. Russia, in particular, had a small uptick in their production size.
Okay, Brian, we'll be back after the break. Stay with us right here on the Market Day Report. All right, let's go back and visit with Brian Hoops about this livestock market. Kind of a mixed action over here in the live cattle, and I mean, we did start off with a little bit of strength, but we had some of these front contracts get a little bit weak here just the last little bit.
Yeah, we certainly have. You know, the cash trade probably won't develop until later this week. Feeder cattle getting a little bit of a cue from the lower corn prices. The slaughter numbers last week were down from the previous week, but they're still above last year's levels, and they're probably going to remain pretty aggressive as far as killing cattle for the next week or so, with plenty of margins to work with. You've got the Thanksgiving holiday in there. That'll back off the slaughter numbers a little bit, but I got to think these packers are still going to be paying in the market for cattle, and on dips that we see. There should be pretty active fund buying.
We've been trading at a discount in the cash to what we've seen in that front month of that live cattle market now for a little bit, and it seems like the futures could be leading the cash just a little bit. I'm not sure which way. But is there any concern over here that this thing will eventually maybe run out of fuel?
The biggest concerns would be if we get into the Thanksgiving week when packers don't have to be quite as aggressive buying for cattle, because they're going to take a little bit of time off during that time frame for sure. But boy, until we get to that type of a situation, I can't imagine the packers really wanting to back off on their slaughter very much. They have margins over $360 a head. They're going to want to keep those kills humming right along.
All right, live cattle right now on the lower side for these front two contracts. We've got the December down 22, the February down 13, but that April's up 35. Brian mentioned the feeder cattle market. January up 105, March up $1, and the April up 93. And in the hog complex, we've got the December down 75, the February down 60, and the April's down 48, so weakness there as well. Thank you very much, Brian. Brian Hoops, he is our guest here for this time around, and he is with Midwest Market Solutions. Tammy.
All right, thanks, John. Good info.